Hey guys, Frank Minetti, branch manager of Advisors Mortgage Freehold. Glad you're joining us. Hey, if you're considering stopping your home search because interest rates have risen lately, stop thinking about it. Don't do that. I want to talk about to you today what the cost of waiting is actually going to mean to you in dollars and cents. Not many people considering buying a home are thinking about there's a cost involved in waiting. Hey, look, interest rates were 3%. We know that. We know where they are today, closer to 6%. But you shouldn't stop looking for your home. And I want to give you a real world example of what that means to you as far as dollars and cents. Unfortunately, many people, when they're shopping for a home, what do they buy? Not the house. Yes, you get the house, that's cool. What they really buy is mortgage payments. They're buying payments. They're not buying their home. The home's attached to that payment, and that's what they're looking at. So I want to give you a real world example. Let's take a look at, let's say you're purchasing a property or considering a $500,000 price range, kind of like the average, in our neck of the woods here in Central Jersey, right? $500,000 price range, you want to put down 20%, you're financing $400,000. So let's take a look at a $400,000 mortgage at 3% at the beginning of the year, right? That was going to cost you about $1,686 per month. Well, now we're at 6 and oh my God, what are we going to do? Well, yeah, your mortgage payment's higher. Instead of $1,686, you're at $2,398. So what does that mean real world? Your mortgage payment for the same mortgage amount just went up by $711 a month and change. Oh my God, that's catastrophic. Well, is it? We got to look at the big picture, guys. We got to look at history, and we got to look at really what money is. Money as far as house money I'm talking about. So here's what the cost of waiting will do for you. Let's assume you decide, hey, you know what? I'm going to wait for mortgage rates to go back down to 3%. Quite honestly, guys, I don't have a crystal ball. I believe rates are going to come down a little bit. I don't know if we're going to see 3% anytime in the short term. And short term, I'm talking 1-2 years, something like that. So here's what the cost factor involved in this is for you. If you wait, $500,000 purchase price, I'm going to wait for interest rates to come down to 3% again. Let's say they do. Yeah, you save yourself $711 a month, but you really don't. And let me show you why. And also, you lose out on something. So if you decide to wait for that interest rate environment to change, let's not forget about house money. What do I mean by house money? I'm talking about property appreciation. So you take that $500,000 today in 2022, that's the price of the house you're looking at, and remember, it's going to appreciate. Now, a lot of economists believe we're not going to increase at the levels we did in 2022 and 2021, which here in Central Jersey was roughly 22.6%. So there's a couple forecasts out there. In my heart, I believe we're going to see property appreciation going forward in the next 12 months of about 11%. But I also want to look at the low end of what people are forecasting, which is about 5.7%. So you take that $500,000 home, and if it appreciates by 11%, that house you were going to pay $500,000 for, you're now going to pay $548,000 for next year. What does that mean if you wait? You're paying more. Yes, your payments have come down, but you lost out on almost $49,000 worth of equity. That's real money. If you wait 2 years at that same 11% rate of appreciation, what's going to happen is that $500,000 house is now going to be worth $609,000. So you're going to pay $609 for that house you could have had for $500. Yes, the interest rate was higher, but you missed out on $109,000 worth of equity. So what happens? You wait, you pay $609 for a house that you could have got for $500. So you basically are paying $109,000 more for the same house you could have bought for $500. That's lost dollars and cents. That's lost potential. And the other side of the coin, we got to track back interest rates. We got to see the fact that there's always ups and downs and cycles in the market. I can almost assuredly tell you there will be an opportunity if you get in at 6% today with an opportunity to refinance down the road into a lower monthly payment. Guys, don't wait. Don't lose out on equity. At 5.7%, if you wait for 2 years, the cost of waiting is $109,000. You might say, oh, well, that's not real money. It is real money. You have access to it. You could do something with it. You could take a home equity line later. You could do whatever you want. And that's real. It's yours. Don't miss out. Don't lose out. And here's the other benefit, what a lot of people often forget. There's a tax benefit to interest rates. What's a tax benefit? Would you rather pay Uncle Sam or keep some money in your pocket? You get to write off your property interest. You want to keep the money in your pocket and make it work for you. Deal with what we have to do short term and then take a look at the big picture. When you're buying, don't buy the mortgage payment. Buy appreciation. Buy the asset, what that asset can be worth and what that asset can do for you. You know, you see many millionaires and billionaires. Do you think that in their portfolios, when they're, hey, here's what my net worth is, those assets they own, like real estate, are included in their net worth? That's part of your net worth. Don't lose out on the ability for that property to appreciate. Guys, don't stop looking. Keep looking. Call me and we'll discuss your situation and what the cost of waiting could mean to you.